A huge reversal with crude essentially giving back the gains from the last 2 weeks. As one person told me, this market has been trading exclusively on emotion, fear on the way up, and then hope on the way down, as there are now indications supply disruptions might not be as bad as once feared. Now, the trend has been lower, but we've seen heavy declines the last 2 days, and oil's down around 10%. Several factors are weighing: ongoing talks between Russia and Ukraine, a potential demand hit in China amid lockdowns, a possible Iran nuclear deal, as well as traders who were using oil as a hedge unwinding those positions. The latest fund manager survey from Bank of America shows oil is now the most crowded long trade, overtaking tech. So for oil, we're now back to where we were prior to Russia's invasion. Oil spiked above 100 the day the war broke out. WTI then climbed up to 130.50, while Brent reached 139.26. So now, Kelly, we're down more than $30 in a little over a week.
It's not the decline from 130 that amazes me. It's the fact that we're back to where we were before the invasion. So we've stopped importing, or we will soon stop, but the market's pricing it in, Russian barrels. We're trying to figure out how to replace them. And the market is back to where we were before all of this happened. I mean, that's pretty shocking.
Yeah, and I think what it really shows is that these are people who are not usually active in the energy market. All of this knee-jerk reaction, both on the way up and then this dramatic way down. I mean, these 8% volatility swings, that's not normal. And so this is people who don't actually necessarily know what's going on. We don't have new indications, and this is just trading all over the place.
But I'm glad that you had that stat from the fund manager survey, because how many times have we heard people in the past couple months say, look at the spread between energy and tech, 50 percentage points this year, right as it became the main consensus. Now it's gone the other way. The question is whether this reset allows for it to, consolidate and maybe head back towards, I'm sure what Goldman and others would say is still the tightest physical market that we've had in years.
Absolutely. And also, nobody wants oil at 130. I mean, yes, companies make a lot of money, but they don't want that. They have the administration on their back. They don't want that. If they can break even at $30 or $40, WTI at 80 is great. So it's not actually good for anyone. And so people are just very active in this market right now, trying to figure out where it goes next.
Absolutely. Pippa, we appreciate it. Thank you.